move to that one. I'm sorry. For the previous one, I am not sure, but there's this other income expense that it's stated in the 10K that it says that it's consists in primarily in foreign exchange gains or losses related to foreign currency, I guess exchange rates in currency. So I don't think this is related to the core business of this company. So this could probably be an infrequent item.
Yeah, and probably they added to their income statement.
Yeah, it's in the income statement. It's those 45. That's what Alejandra was saying before.
And
I
wait,
think
that
83. I think so. 83.
all right.
If you go up.
All right. So yeah, if you take a look to what Ren and me did to match the cash change on zero, we basically add the missing values in the effects of exchange rate changes on cash in order that it match. So maybe that is why it was not working, because it was in the income statement, right? But it was not in the statement of cash flows. You know, that exchange rate loss or gain, which is infrequent, right? So maybe that is like the cause why this was not matching, and we decided like to tweak this one, you know, which makes sense to what you are saying.
Okay.
Yeah. So really, thanks for that. Really quick.
Like if you tweaked it already, then I guess it's fine.
Yeah. No, because if we don't do that, like we will not have the net change on zero, you know, which is like the input in order that you can start evaluating the other sheets, you know. So yeah, like taking a look to the ratios, for example, return on assets. There is like a curious thing happening, like from 2021 and 2022, it increased, but from 2022 to 2023, it increased a little, you know. But as we were discussing previously, that Tesla is trying to depend less on leverage, like where we saw it here on leverage, right? They are trying.
Do you have the leverage index there? If you type it and search for it, is there like a leverage index?
Where?
In that, I think there is.
Where?
Wait.
Take your time.
Leverage index, yes, it's there in profit. If you go to the profit margin decomposition, it's row 66.
Oh, but where? In which sheet?
In the analysis spreadsheet. If you go to row
66 here.
Yeah.
Got it. Yeah. Leverage index. Okay.
There's a huge decrease from 2019 to 2023. Which means they have paid down a lot of debt or increased equity.
Yeah. Makes a lot of sense. Yeah. So the leverage index was super high on the beginning because they were basically taking a lot of leverage, a lot of loans. Then it was decreasing, and then it was increasing again. But let's go to the ratios. So let's go to this one that takes into account the leverage, the ROCE, right? So here they, like from 2021, from 2022, there was an increase. From 2022 for 2023, there was a decrease, but they are depending less on leverage, according to the capital structure leverage. And the asset turnover is kind of stable.
The return of assets that increased a lot from 2019 to 2023. I think there is from 0.09 or 0.09 to 15.7 or 16% in 2023. So it means that they are more efficient now,
without
generating profits from its assets.
Exactly.
Turnover, yes.
So they are managing to improve the efficiency of the asset turnover So they are depending less on leverage to generate income, like during this last year.
To generate profit, yes. I agree.
They also have like an increase in profit margin, which makes a lot of sense with what we are saying, right? From 2021, from 2022, there was an increase, and then it's kind of stable.
Yeah, they're struggling right now. Actually, Elon Musk is reducing the prices of the Teslas most recently. So that's definitely going to impact their profit margin.
So it's going to be interesting to know, for example, the profit margin for 2024, because if he's reducing the cost, like if he's reducing the price, then he will need to be more efficient on the asset turnover to not keep depending on the banks, which is the strategy that he's trying to implement during the last years, you know?
Yes, it is the reason also that the stock price has gone down so much, because I think analysts don't agree with his view of reducing the prices of the Teslas to increase demand.
I had a conflict yesterday and I wasn't able to be part of my group's presentation or 5-minute recording, so I'm adding my part here. I'm going to be evaluating the profit margin for the return on assets for Tesla, and as we can see here in this area, 2021, 2022, 2023, it's showing a positive trend over the 3 years. The ROA increased from 10.9% in 2021 to 15.7% in 2022, showing that there's a significant improvement in the asset utilization. Then in 2023, the ROA slightly decreased to 15.6%, but the overall trajectory remained positive, suggesting that Tesla has been generating higher returns from its assets compared to previous years. This positive trend can indicate that there's a strong foundation for sustained growth and profitability.